Are you thinking that this is the right time to invest in equities? You are absolutely correct. Judging the current scenario, it seems that the next 2 to 3 quarters would be a dream time for equity investors. And if you're gonna miss the bus now, then trust me, you're gonna regret when you see the markets fly in 2 to 3 years. And that's why I want you to make the most of it. Primarily, there are two ways to invest in equity: direct and indirect. When you directly purchase the share of any company from the stock market, that is known as direct investing. And when you invest through mutual funds, that is known as indirect investing. If you want to know when and how to invest in direct stocks, please do watch my other video, the link of which will be in the description as well as the I button. And in this video, we will be discussing about 5 most popular categories in equity mutual funds. So without wasting any more time, let's get started. Before we start, I would like to tell you that this is not a recommendation video. We are just going to look at the long-term charts and the stats of a few mutual funds and discuss on that. In this video, we have discussed a few technical terms like NAV. NAV stands for Net Asset Value, which is nothing but the price of each unit of the mutual fund. And the second term is Expense Ratio. Expense ratio is nothing but the fee or the charge of that mutual fund. And the third point is Exit Load. The exit load is charged when you take out a specific amount of money within a specific period of time. Both exit load and the expense ratio could vary from one fund to another. I will separately mention these stats for each and every fund we discuss. And if you don't know what is a mutual fund and you want to know how it works, then please do check out my other video, the link of which will be in the description as well as the I button. The first category of fund which we are going to discuss is large cap funds. As the name suggests, these funds primarily invest in large cap companies, and this is exactly why the returns of this fund are relatively stable when compared with the mid and small cap funds. Considering its large cap orientation, the risk and the returns of these funds are relatively much lower than a mid or a small cap fund. One of the better funds in this category is SBI Blue Chip Fund. Now let's look at the capital allocation and a few stats of this fund. The equity allocation of this fund is 94.5%, and out of which 74.89% is allocated in the large cap companies, 7.95% is allocated in the mid cap companies, and around 1.24% is allocated in the small cap companies. This is a very good fund for long term investment. The current expense ratio of this fund is 1.85%. But please keep in mind that the fund houses may change these expense ratios anytime. So before investing, kindly check the expense ratio. This fund also charges a 1% exit load on all withdrawals made within 1 year from the date of investment. From this fund, you can expect a compounded annual return of 12 to 15%, which is much more than any of the debt investment instruments available in the market. Now let's move to the second category, which is mid-cap funds. And as the name suggests, these funds mainly invest in the mid-cap companies. And Axis Mid-Cap Fund is one of the better funds in this category. This fund has allocated 83.32% in equities, out of which 11.6% is in the large cap, 59.8% is in the mid cap, and 5.94% is in the small caps. The expense ratio of this fund is quite low at 0.56%. And this fund also charges an exit load of 1% if you withdraw 10% of your total investment within 1 year of the initial investment date. In the long run, you can expect a compounded annual growth of 15 to 18% from this fund. Now let's move to the third category of funds, which is small cap fund. Even in this category, I have chosen a fund from the SBI Fund House, which is SBI Small Cap Fund. The reason why I like this fund is because it has one of the highest equity allocations among all these small cap funds. Its equity allocation is around 91.29%, out of which 74.16% is in the small cap category, around 8.52% in the mid cap category, and 2.21% in the large cap category. The expense ratio of this fund is 0.93% and the exit load is 1% for all withdrawals within 1 year from the investment date. In 2017, this fund delivered a return of more than 100%. Now the fourth category which we are going to discuss is multi-cap funds. The difference between a multi-cap fund and other funds are that the multi-cap fund can change their equity orientation according to the market scenario. In this category, the Kotak Standard Mid-Cap Fund has delivered very stable returns. This fund has an equity allocation of 94.73%, out of which 67.34% is in the large cap, 23.61% is in the mid caps, and about 1.78% is in the small cap. The expense ratio of this fund is 0.72%, and the exit load is 1%. If you withdraw your money within 1 year from the date of investment, you can expect a compounded annual return of 12 to 13% per year. Now today's last, and to me the most important category of mutual fund, that is ELSS fund, which is also known as tax savings mutual fund. As most of my investments are into equities, this is one fund which I definitely use for my tax savings purposes. One of the main reasons why I like this fund is it has a 3 years of lock-in period. Lock-in period means once you invest, you cannot take out your money within 3 years. This is the exact reason why I always encourage new investors to invest in ELSS funds. As we all know, the equity market fluctuates a lot, and due to this, sometimes your portfolio could give negative returns, and it's very difficult for a new investor to see his portfolio in red, and this is when they lose confidence on the market, and in turn they book losses, and that is not the correct approach to the equity markets. All investments, especially equity investments, need time to perform, at least 3 years. The longer you stay invested, the more returns you get. Anyone who intends to save tax should always invest in an ELSS fund. This could give more returns than any other debt investment instruments like life insurance, FD, etc. And one of the top funds in this category is Axis Long-Term Equity Fund. This fund has an equity allocation of 95.77%, out of which 72.12% is in the large caps, 18.76% is in the mid cap, and around 4.89% in the small cap. The expense ratio of this fund is 0.93%. And due to the 3 years lock-in period, this fund has no exit load, and you can expect a CAGR return of around 15 to 18% from this fund. So these are the funds which could perform better in the long run. And if you have watched this video for so long, then please do hit the like button. And if you are new here, please do subscribe our channel and hit the bell icon for more such videos. And until the next video, take care and Jai Hind.